So let's have a look at the format. Let's have a look at the format of the group account. So you will start by writing maybe H group, income statement for the year, ended that first blah blah blah. We don't know what is it, blah blah. So we normally start with, you underline this, start with the revenue. So in the revenue, what do we do? In the revenue, add for the parent plus the subsidiary. We take the parent plus subsidiary, and then we subtract the intercompany owings, or the intercompany transaction. We subtract the intercompany transaction so that we can get adjusted revenue. What about the cost of sales? Also, check for the parent plus subsidiary. Whatever you have subtracted here, you should also subtract here. So we will also subtract the intercompany transaction, intercompany transaction, and then you add UPFA. We said you add the unrealized profit. You add also this UPFA, UPI and UPFA, and you subtract if there is depreciation overcharge. If there is depreciation overcharge, you subtract. If there is depreciation overcharge, you subtract. So whatever you are getting here, if you subtract this, it will give you your gross profit. This one will give you your gross profit. This one will give you. So after getting the gross profit, we need to add other profits, or other incomes. So which income do we have here? We have the investment income. How do we adjust the investment income? Remember, this investment income means that the parent company has acquired certain shares from the subsidiary company and the associate. And remember, we said for any income to be recognized, there must be a third party involvement. So in this case, we will exclude the investment from the subsidiary and also the investment from the associate, because these are the joint business. So here you will take for the parent company, subtract for the subsidiary, and also subtract for the an associate. Subtract for an associate. So once we have that, we will have the total income, which it is not, you can show it or not, it is depend. We have now expenditure, we have expenses, which will have admin. Take for the parent plus the subsidiary only. We have the cost distribution, or selling and distribution. Also take for the parent plus subsidiary company. We also have finance cost. We also have the finance cost. Take for the parent plus the subsidiary. Once you have the finance cost, what else do we have here? Impairment. We'll have impairment here. Impairment, we have been we saw it on the adjustment. You will be given the rate of the depreciation of the goodwill, so which you will take for the parent and also the subsidiary. So once you will have that, you will have the profit before tax. What else after profit before tax? You less the tax, take for the subsidiary and the parent, and then you arrive at profit before tax. After that, we say we add the profit of NCI. No, add the profit of associate. at the profit of associate. How do we get the profit of associate? Take the percentage of that associate, multiply by profit after tax, and then that one will give you the total profit. From that total profit, we have the profit attributable to NCI. We have profit attributable to NCI. Once you get this profit attributable to NCI, the balancing figure will be profit attributable to parent company. So this is what you need to know under the format of groups account. So you need to know this one for the income statement. So we will look at the illustration. The format of balance sheet, it is just the same as others. You don't need to have the format of the balance sheet. They all the same. So you look at the illustration of a profit and loss account.